A lot of moving parts in the economy right now. As we've been talking about the last couple of hours, we've gone through some inflation numbers with you. So the newest number showing that inflation did slow last month for the first time since September. Measure of underlying inflation dropped to a 4-year low. So again, we'll see what the tariffs on steel and aluminum end up doing here if it shoots things back up. Grocery prices, according to this newest data, stayed the same from January to February, which is good news for consumers. We've seen about a 25% jump in prices compared to about 4 years ago. And so, yeah, we wanted to talk a little bit about that, inflation, also the stock market, and not just in general terms, but really kind of how it impacts us directly. And there is our friend, Jason Brown, finance and stock market expert at the Brown Report, author of 5-Year Millionaire. Jason, thanks so much for making some time for us today. We really appreciate it.
Yeah, thanks for having me. Excited to be here.
Yeah, so again, lots of moving parts right now, and we're hoping you can slow things down for us just a little bit and talk to us in the way that you do so well, just helping us understand this from a very basic, at a very basic level. What is happening, right now as of like today with the stock market? Let's start there.
Yeah, so if we talk about what's happening as of today, I think people are breathing a sigh of relief because today is one of the only days that we don't have a big sell-off in the market. So that's what's happening today. But if you look at the last, week, the market has just been dropping kind of like a rock. Mm-hmm. And it's been causing some panic on Wall Street and then people's bank accounts.
And so I think a lot of people are looking at the why here. And I think the word, tariffs kind of jumps out at us. Is that it? Are there other things at play? How big of an effect is that having?
Yeah, so I think everyone has to understand there's 3 things that move the market, which is the technicals, the practicals, and the fundamentals. And what that simply means is when I say technically, people look at the price on a chart and say, is this stock overvalued or is the market overvalued or is it undervalued? So we were at all-time highs. And so in order to go higher, everything would just have to be rosy day scenario. Inflation would have to come down, Fed going to cut interest rates, and there'd be no tariffs or geopolitical tension. That didn't happen. So we're at all-time highs and we don't have a perfect scenario. So stocks in the market started to retreat. You then throw on top of that the thought of tariffs. And so that is practical information, meaning, something is physically changing the outlook of what we believe companies can make as far as profitability, or changing the outlook of what we believe consumers will be willing to spend. And so that's driving prices down, saying maybe these companies won't hit their earnings. Maybe they're going to have to give up a little bit more profit because of these tariffs of important goods. Maybe it's going to cost a little bit more for the consumer. So they're going to have less money for vacation, less money for staying in a hotel, less money for cars, etc. So all that translates to how much should I pay for this company now? Because all of these things are going to impact the goods and services that they sell, which brought the price down. But the third thing I said that moves the market is fundamentals. And the fundamentals haven't really changed that much. And what I mean by that is, yes, there's been announcements of tariffs or news, and then in some cases they have been enacted. But we all didn't run out and just stop using our iPhone the next day. We all didn't cancel our Amazon account and stop shopping on Amazon in the last 72 hours to a week. And so when you think about it like that, some of the panic selling has been a little bit overdone.
And that's so interesting to put it in those terms, because I think that's where a lot of people are, whether they dabble in investing or they're getting ready to retire in a few years, is just this perception of what's happening and then the reality, and just trying to mesh those two together. You talked about this kind of tick up, highs. Do we expect to see a correction at some point? Like how much can we sustain that?
Yeah, so we already saw a correction. As I look at my stock charts right here, the S&P 500 was at 6,100 level. It's now down to 5,600, which means it took a 9.87%, which is pretty much, let's just round up, keep it simple, is a 10% haircut or discount or sell-off that the market just had. So we've already had the pullback or the sell-off. And what you have to do is keep a level head and ask yourself, okay, yes, we understand that tariffs are here. The market is saying, what type of discount should we apply to that? Because it's not like these companies are worthless. It's just saying, okay, Does that mean they're going to sell 10% less of goods? Are they going to, lose X amount of sales? And so now that that number has technically been accounted for in the market, I believe a lot of stocks are really at a good place to start to buy because it's just like a car or a house. If let's just stick with a house. If a house had a 10% discount, you don't just go say, well, what's wrong with the house? Like nobody wants it. People still need a place to live. People still need a place to rent. And so you start to now say, okay, yes, interest rates are high, but we already have discounted this house 10% for that. We're not going to discount it another 20 or 30%. And it's definitely not going to go down to zero because it still has some utility use, which a lot of these companies still have a utility use. Google, you still go and search for stuff. Facebook, you still post about how upset you are about the stock market on it. Amazon, you still order your groceries or do your 2-day shipping from it. So it still has a utility use. And I want to encourage people to not forget that component. These stocks aren't going to zero. And furthermore, they're probably not going much. In some cases, stocks like Tesla are 50% off their highs. It's not going to zero. Electric cars are the future. Elon Musk is partnered with the president, if you will. He's not doing all this just to watch his own company tank. I wouldn't be surprised if there's a unique deal on electric cars or something down the road. But we have to remember these companies and their products have some utility use and are not going to zero.
That's really interesting. So if I'm hearing you correctly, it sounds like those who may have been sitting on the sidelines while things looked volatile, now might be the time to get in there and start looking around to see what you could buy. Is kind of where I want to paraphrase you incorrectly here, but it sounds like that's where you're going with this. Yeah.
That's exactly what I'm trying to tell people listening is that you have to think about it like this. You don't technically want to buy stocks at their all-time highs because how do you know that they're going higher? You really don't. But when you look at a stock like Apple, who was at, let me just pull it up real quick. Look at Apple, who was at $260 a share. It's now went down as low as $215 a share. We now say we have a range of where we believe Apple can go. If it was at 260, how do you know it can go to 275? It's never been there before. But now we know at some point it had a value of 260 pre-tariffs. So if we can get past this tariff and this geopolitical front, we now know that Apple can at least get back to 260, which starts to say, do I want to own it at 215? Because I know how high it could potentially go. But I also know that we all didn't just stop using our iPhones in the last week, which means it's also not going to zero. I don't think it's going to go much lower than this 215 level. I mean, it could fluctuate. It's not an exact number. But what I do know is that we're not buying it 45 points higher at 260, which is you're in a good place to own a great company.
Okay. Can we talk specifically to a group of people who might be nearing retirement, maybe in the next 5 years or so, and they're looking at this and they might be really anxious right now? What's your advice for that group of people?
So what I would tell those people is if you look at any big economic event that kind of rocked the S&P 500 or your retirement or investment account, you could go back to, let's just take something as recent as COVID-19, where the entire world was shut down and we just had never experienced anything like it, at least not in my lifetime. And so you're like, oh my goodness, not just the US economy, the world is shut down. If you look at the data, it took us 10 to 12 months to come back out of that from a stock market standpoint. And then the S&P 500 continued to make new highs all the way up until, recently where it pulled back. So if you don't have to retire in the next year, you're going to be okay. So if you can get through the next 10 to 12 months, there's not been a economic activity, not even 9/11, where they flew planes into the World Trade Center, that lasted roughly more than 10 to 12 months before we started to pull out of it. You can even go back to the '08 real estate crash, and you can look at when companies were crashing due to fraud and banks were failing. It was about 10 to 12 months, and then we bottomed out. And then the market took off from there. So as long as you don't have to retire in the next 12 months or pull too much money out in the next 12 months, I think you just keep a level head and understand that nobody wants to tank the U.S. economy. And so far, no one president and no policy has been able to do it. We continue to go higher long term.
Interesting. Okay. Can I ask you about inflation here? I just went through some of the, not the specific numbers, but some of the things that we're seeing here. The recent numbers came out. So as we talk about, it's now slowed last month for the first time since September. Let's see, a measure of underlying inflation dropped to a 4-year low. Grocery prices stayed the same from January to February. What is that telling you?
Yeah, so the good news is inflation grew by, I think it was 0.2%, which was the lowest in 4 months, as you just noted. And so that means inflation, just think of it like a plane. If inflation was going like this, it's now starting to go like this, and then we want it to flatten out. Yeah. And if you're federal Jerome Powell, you want it to go this. You want it to go down a little bit. What that tells us is the incline is starting to decrease, and then we're starting to flatten out. And then the last phase, which is the hardest phase, is to get inflation to go down. You also have to think what has to happen for inflation to go down. There are some companies that realize that Americans are going to pay a little bit more, and we can just blame it on inflation, which is why some companies had record profits, even though we were supposed to be in a recession and different things like that, because they kept the prices high. And so that last mile is also, we need to see corporations giving up a little bit of the profit. We need to see individuals or small businesses not price hiking or still charging us like we were when everybody was kind of getting free money and low interest rates. So that last piece is going to take a global sacrifice. But I also think that's kind of the game that's happening right now with tariffs. It's like, okay, if I can get everyone to come to the table, renegotiate, start to lower their prices, if everybody starts to hurt a little bit, companies will be willing to take a little bit less profit, which means they'll have to lower their prices, and we can get that last bit of inflation down, which is what we ultimately want. And most people forget that even if things cost a little bit more, it actually helps us drive down inflation because we're not spending and buying as much goods and services. So that's A, what we want. And then B, we still have some options in the chamber, because then that gives Jerome Powell what he needs. If the economy actually starts to slow too much, well, he's going to do what we really all want, which is interest rates to get lower. So I really think this is a game of chess and not checkers. And although short term, it seems like we're taking on a little bit of pain, I think the long term gain is going to be lower inflation and lower interest rates, which is going to spur the economy to go to new levels and new heights, which I believe these stocks will be at a discount that you're buying now. You're going to wish you picked some of it up.
Really? Okay. All right. Okay. I love that you're willing to go out and just and put that out there and give us some advice, because a lot of people are like, I don't want to tell you, but this is what you do for a living, and we always appreciate when you can be, real with us. If we have, Amber, do we have a couple more minutes with Jason? Okay. Just a couple, because we didn't get a chance to talk to you last time you were on, kind of about your story, and I just found it so interesting, and I would love for you, if it's okay, to share a little bit about your background and what got you interested in this industry.
Yeah, I pretty much grew up poor kid here in Detroit, Michigan. I didn't have a bed growing up. We slept in sleeping bags and bars on the window and drugs in the neighborhood and gangs. And I always wanted to know how I could change my situation. And so I used to hear about the stock market and investing. And when I was 18, I took $2,000 of my graduation money from high school, because where I'm from, if you didn't go to jail or you didn't get killed or didn't get someone pregnant, it was a celebration if you made it through high school, which that was a unique time. So I took my $2,000, went to a small bank, invested it. I came back 2 years later, thought I would have $6,000, and it was down to $700. So they lost $1,300 of my money. And that was the moment I said, I believe I can do this myself. And so I took the $700 out and I invested $500. I spent $200 on some gym shoes. And what I did was, like most people, and this is why I believe in what I'm telling you, because I bought the stock the company I work for at $5 a share. That stock fell to $4. I said, maybe I don't know what I'm doing. Stock went back up to $5. I said, okay, I just needed to go a little higher. It fell back down to $4. And then it went up to $5. And I said, I've seen this before. I got out at $5, it went down to $4, I got in, and then when it went up to $5, I got out and made my first $100, which is also why I'm sharing with you, during these pullbacks, this is really the best time to buy, not at the all-time highs. And that's when I learned how to read stock charts. And I took a $10,000 student loan because I had a scholarship to school, and I actually grew it to $113,000 as a 21-year-old college student. I'll speed the story up. I ended up dropping out of school, full-time trading and investing for 3 years. I ran the account up to $250,000. I lost $250,000 trying to make $500,000. I was flat broke by the time I was 27. And I had to go back and get a job. And so I got a job where I based my lifestyle off the hourly, and I used my commission checks to get back into the stock market. So I was living below my means, moved back home with my mother, sold my expensive car, had to humble myself, which is where some of my financial principles come from. And from that moment, I started teaching people what I did wrong. Like, why did I lose that money? Why did I risk so much? How come I didn't know how to protect the money with put options or different things like that? So I started teaching people what I was doing wrong, and I was documenting myself making the money back. And as I started to make the money back, people were following me on YouTube, and I was calling it the Brown Report, where I was just reporting on how I was making this money back that I lost. And that kind of led me down to this road to teach. And from the time that I made a decision that I wanted to be a millionaire, it took me 5 years to become a millionaire, reach millionaire status, which is what ended up eventually leading me to write the book, 5 Year Millionaire. It was about my story of making money, losing it all, getting it all back, and sharing my principles of how you can avoid some of the pitfalls that I went through, but also how you can get back up and get back on the investment horse, even if you've lost money before. So hopefully that was a condensed enough version of my story.
I wish we had another hour to talk to you about that. That's just incredible. I knew just a little bit about your background, but I didn't realize to the extent. So that it's incredible. Congratulations on your success and hard work and never giving up, and just continuing to grow and learn. So many great lessons from you today. We always appreciate your time. Thank you for your insights, and I hope we can have you on again soon.
I'd love to be a resource anytime you need me. I really appreciate you.
Thank you. Jason Brown, Brown Report, 5 Year Millionaire. Incredible story. Thanks, Jason. Take care.
Thank you.
All right. We'll see you soon.